It was just a quick question.
Let's see. Okay, I am recording now. It is
Mhm.
March 5th. So, Exocel, please ask me your question.
So I had a question about the exam. Will it be exactly like the practice exam, or we need to review some theory as well?
Let's go to the practice exam. I think it will be good.
Mm-hmm.
You can see it?
Um, yes.
Okay, that's good. All right, now we go to the beginning. So what I say to students is if you review my PowerPoint, which does include some theory, all right?
Mm-hmm.
So need to understand theory of corporations, advantage, disadvantage, understand the definitions that were at the beginning of chapter 11, because corporation, a corporation is a unique legal structure. So we want to make sure the students understand that.
Mm-hmm.
All right. So I don't believe I had questions on the practice exam on this, but you should know it. Okay.
Okay.
So practice your homework problems. You can go back and do the practice homework. And there's small points for that, like 0.3 points per assignment. Take a look at my slides. And I say go and look at the textbook itself, and you'll see that there are practice problems within the chapter and at the end of the chapter with solutions. So it's a great resource for that too. Okay.
Okay.
Know how to do. So understand theory of liabilities. What are they? What's a convertible, callable? What is a mortgage? So, and then it is a lot of journal entries and what we
Mm-hmm.
have on the practice exam, calculating the market price of bonds.
Mm-hmm.
We use the present value of the interest payments. We use the present value of the principal and we add it together. So, all right. So then how do you do the journal entries for um, original issuance of the bond? Did it get issued at discount or premium? And then your first interest payment, and then setting up that bond amortization schedule. So we have a lot on that in the exam. I'm sorry, in the practice exam. Know
Mm-hmm.
how to do know how to do notes. I'm sorry, mortgages. And then there's some time value of money that's on Appendix G. So there's, future value, a single amount, future value of an annuity, a present value, single amount, present value annuity.
I had a question on this part as well. I get confused, how to know if it's present value and or future value. I tried, but sometimes I get confused.
I can understand that. That is why I do these little boxes. So,
Mm-hmm.
so for example, what is the balance of the account at the end of the 6th year? That means your unknown, your question mark is
Mm-hmm.
your future value. Okay. So that is
Okay.
what we are solving for. Um, Here they're saying they deposit it annually. Annual means once a year for 6 years. So that for 6 times they deposit the money.
Mm-hmm.
So if it's a series of equal payments, it will be an annuity, not a single amount. Okay. So your
Okay.
first question should always be, is it a present value or future value? So then now you're down to two tables, right?
Mm-hmm.
And then you say, okay, is it a series of equal payments or is it a single amount? So let's look at the second one. So this one's future value. That's what we're solving for. So let's go to the end. I always go to the question first and then I read the question. What amount will Wingate repay at the end of the 3rd year? So again, it's future.
Okay.
So now we're going to do future value is our unknown. So that's where we're going to put our question mark.
Mm-hmm.
And then is it a single amount or an annuity?
Single amount.
Yeah, just the 80,000 one time.
Okay.
They borrowed that money. So down here, how much money must Lewis invest today for the
Yeah.
purchase?
Present value. Okay.
Present value, exactly. Good. And he wants to buy a car in 3 years, he will need 2,500 for down payment. So we know future value in 3 years has to be 2,500. So he wants to put money in the bank now to figure out if it will grow with interest at 9% to 2,500. Last one, what amount should Fry pay for this investment? And it's today, what should they pay today? So again, that will be what?
Present value.
Right. So Fry is considering investing in an annuity. So it's an annuity. So it's either PV or PVA. It's either FV or FVA. So first question for present value, future value. Second question, single amount or annuity. And I think that will help. But that is the hardest part. The math is easy, right? If you just
Yeah, exactly.
it's just setting the thing up. So that's the hardest part. Okay, so what else do we have here? Issuing bond. I had a lot of bonds on the practice exam. Calculating bond selling price. And knowing the payroll. So go back and look at chapter 10. We had other liability problems as well. We had sales tax. We had payroll. We had, what else was our liabilities? Now it's out of my head. We talked a little bit about warranty, but I didn't do journal entries, so more theory. Notes payable, we talked about that as well. So all of those current liabilities could be on the exam. Now, this problem has 2 journal entries, one for the record the payroll and then to record the payroll taxes. So, and I think somebody said on the solution, I also had them paying the when the employees cash their checks. So debit, salary and wages payable, credit cash. Okay. Current liabilities, we have a notes, sales tax. Unearned revenue is the other one you should know how to do.
Okay. Sounds good.
And okay. What else? How do you say what else in French?
Quoi d'autre?
Quoi d'autre?
Quoi d'autre? Yeah,
Quoi
d'autre.
d'autre? Quoi
Yeah.
d'autre? Quoi d'autre? Sorry,
Yeah.
but I never resist a chance to have a lesson with my international students. Okay. Sales tax. So if I told you that we collected 13,780, it includes the sales tax. Can you calculate the sales and the sales tax?
Sales tax. Yes.
Yeah,
Okay.
like we did in class. Is federal tax and payroll, more payroll, and then the issuing of check. And then this problem, which is where we say how many, and we had a homework problem like this. Okay. If you know, and think of these as T accounts. So you have a T account, and because I think it's easier, frankly. Let's take a quick look at see if I can do this really quickly, and then you will have it. So let's take a look. So if we look at this problem, this is where you get part of the statement of stockholders' equity. This is where I'm really testing you on, do you understand what these things mean? Okay. You have worked with common stock. You have worked with retained earnings. Okay. But now we have that new account, APIC, common stock, or APIC, preferred stock, all of that. Okay. But I want you to go back to accounting 201 in your mind, and I want you to see this is just a T account for common stock. So let's just do that. Share. Okay. So let's imagine we have the T account here. Can you see my Excel spreadsheet now?
Yes.
Okay. Excellent. Okay. We're going to just do some T accounts. And we're going to do that. Okay. I'm going to make, nope, stay there. I want to make a bunch of T accounts. So our first T account is going to be common stock. And we're just pulling that information off of the practice exam. So common stock has a balance of 1550. Okay. It's there. And it's important that you understand that the balance in common stock is the issued stock. Okay. It is not necessarily the outstanding stock. So do
Mhm.
you remember the difference between issued and outstanding?
No.
That's fair. All right. I'm going to put this is a new account, this chapter, and then we're going to put retained earnings.
I have a question. Is Epic the same thing that paid in capital in excess per value?
That is correct.
Okay.
Just a shorter way to say it.
Okay.
Okay. All right. And in this case, we have treasury stock. Okay. So our EPIC account has 165, and that also has a credit balance. And we're going to do this just so it's easier to read. Okay. Our retained earnings has a balance of 750, also a credit balance. Okay. And our treasury stock has a balance of 180. Treasury stock has a normal debit balance. Okay.
Mm-hmm.
Okay. So let's talk about this. So common stock. So we have, let's go back to the problem. Okay. You can see this. Common stock says number of shares issued, you must calculate. Number of shares outstanding, you must calculate. So you really need to understand the difference between authorized, issued, and outstanding. Okay.
Okay.
So authorized goes back to when the company is first established in their corporate charter. They have to agree what is the maximum number of shares of stock, common stock or preferred, but in this case, common, that they will issue. And what they said was from the beginning, the maximum we're going to issue is 360,000 shares at $5 par value. Okay. So think of that as a box of stock certificates, 360,000 pages. They've done nothing with it at that point. But later on, when they start selling stock, they issue stock. And we did this back in Accounting 201. We debited cash and we credited common stock. Okay. And that was issued stock. Now we're saying, well, you issued it at a certain price, but that may or may not be equal to par value. Okay, so it will be market price. But what goes into the common stock account is just par value. All right. So,
Okay.
so let's go back to our T account. We have 1,550,000 in common stock. The problem has told us that it's $5 par value. Okay. So we know that. So with that information, we can calculate how many shares of stock were issued. How do we do it? Do you know?
Oh yeah, the one 550,000 divided by 5.
Correct. Yeah. So
Okay.
you're going to say 310,000 shares were issued. Okay.
Okay.
All right. Issued. The balance in common stock is the issued shares. Okay. Now, go like that. So how much is outstanding? So let's go back and look. So now we know the answer to this. 310,000 were issued. All right.
Mm-hmm.
We have retained earnings, total paid in capital and retained earnings. But now we have treasury stock, which means the company has bought back stock. from the
Mm-hmm.
stockholders. And that has reduced the issued shares. It has not reduced the issued shares. That has reduced the outstanding shares. So on the day they issued those 310,000 shares, they had 310,000 shares issued and they had 310,000 shares outstanding. Now they have 18,000 less outstanding. Okay. So when we say how many shares are outstanding, we take 310,000 minus 18,000 and you get 292 shares, I believe.
Yes.
Okay, so we're going to do that. So we're going to say, so outstanding is going to be 310 minus 18,000. Where did we go? There. All right. So that's going to be outstanding. All right.
Mm-hmm.
That's answer to that one. So number of shared issued is still 310,000. That doesn't change. Treasury stock is still considered issued. It's just being kind of moved around a little bit.
Mm-hmm.
But we say, but we only have 292 outstanding. All right.
Okay.
Just important you understand that. So then we go on and we say number of common shares issued, so 310, 292. And then you say, remember how we issue treasury stock? What's the journal entry when we buy back treasury stock? So assume we buy it back with cash.
Mm-hmm.
So we're going to reduce cash, credit to cash, and we debit treasury stock, okay? And we said 18,000 shares we purchased,
Mm-hmm.
and they cost 180,000. So what's the average price per share of treasury stock?
Is it 10?
I
$10?
believe it is. So it would be
Yeah.
880,000 divided by
Whatever.
18,000. Yeah.
Yeah.
So that would be 10.
$10. Yeah.
Now here's the tricky one. The average issue price of the common stock was what? And now you go in and you say, well, here's the par value. Here's the additional paid in capital for a total of 1715. And I know I issued 310,000 shares. Okay.
Mm-hmm.
So then we go in and we say, okay, let's take a look. Now we're going to say this is let's say this was one journal entry when we originally issued the stock. Okay.
Okay.
So say, and to record original issuance of this stock. Well, what's the journal entry? Don't worry about the dollars, but what's the journal entry when we issue stock?
Is it cash?
So we got cash into the
Cash
company.
and
Good.
common stock
It will be common stock at par value.
at per value. Okay. In
And then we have to acknowledge
I pay common stock. Yeah.
if you common stock, right? Okay. So you want to make sure you do that. So we know what went into APIC common stock is 165.
Mm-hmm.
We know what went into common stock at par. So the cash we collected was the 2. Okay. So that
Mm-hmm.
was the original journal entry when we issued this stock. So now they're asking, what was the average selling price of this stock? Well, we got them as 1715. So what's the average selling price of that stock issuance?
I think the 1,715,000 divided by the 310,000.
Very good. Yeah,
Okay.
gonna do that. Yeah, so it's going to be obviously more than $5 because we know we got more money for it, and par is 5, so 553. All right.
Okay. Mm-hmm.
All right. So that's a good problem to really test your knowledge of the journal entries and how they all relate together.
Okay. Sounds great.
And then I think that's the last. No, we have more stock transactions, and to be aware of stock had par value, stock had stated value. Just use the different language in your journal entry when you say APIC, common stock APIC additional paid-in capital and so forth. So let's see, and then more journal entries for preferred stock. Make sure you understand that. And I think that's it. So it's a lot of liabilities, a lot of
Mm-hmm.
degree of liabilities, calculate interest, no discount or premium. Don't just study discount, study premium too.
Okay.
All of that.
Okay.
And warranty, you don't need to calculate warranty on the exam. You don't need this. This we don't need. That was in a previous book. So, but the other current liabilities you should know how to do. So, all right.
All right.
It's good. It's good.
Uh,
It's a big chapter. And then at the beginning of class tomorrow, I'm going to give the teams about 10 minutes and you guys can make a quick plan of when you will complete your contract for
okay.
project 3. So we'll do that. And then usually it doesn't take that long. Project 3 is not as big as well, you didn't have me for accounting 201. It's not as big as the financial analysis for accounting 201.
Mhm.
It's a lot shorter. It is just doing some vertical analysis, if that makes sense to you.
Mhm.
Means it will be just vertical analysis. Yeah, vertical, a little bit of horizontal, a little bit of vertical analysis, which we've already done in accounting 201. So anyway,
All right.
all right. Anything else?
No, that's it. That's what I had
Excellent.
to.
I'm so glad you came by. So that's great.
Thank
All right,
you.
I will see you.
Thank you. Bye.